Hello, it's Richard Pearce from FinextraTV here at Sibos 2022 in Amsterdam, and today I'm joined by Professor Brian Scott-Quinn from the University of Reading and from ICMA. We're talking today about his new book, and I'm delighted to have him here just hot off his session at Sibos where he's been talking about this. How are you?
Very well, and very good to be here at Sibos and talking to you.
Well, thanks for sharing the book, and I read it through, and it's a very substantial volume, so I hope we can do some justice to it today. But let's start with climate risk for banks is an issue. They know this. What can be said that's new, that's going to interest them and perhaps change some of the behaviours we're seeing?
Well, I'm very focused on new technologies and the opportunities that they present to banks, because without doubt banks' portfolios of oil and gas and other emitting industries will decline. So it's what will replace them and how they can actually be there to provide the financing. Without that financing, of course, we won't have an energy transition. And what's very clear from the statistics is that apart from a little blip in 2020, emissions are still rising, concentrations in the atmosphere are still rising, and this year has been the highest year for emissions ever, so we're not actually doing very much.
Yeah, so the specifics of it are that you're focusing on the energy transition first of all, which is so important at this time, if
Yes.
not always. And that's why then that you spend the sort of first 10 chapters of the book talking about the different varieties of energy, the energy transition. So how do you translate from sort of talking about climate and banks and then to those 10 chapters? What's your transition path, if you like, for the reader?
Well, I think if we're going to achieve a transition, it's the banks and the investors who are going to help achieve it. In fact, they are absolutely critical. But if the banks and investors don't have people who are up to speed with the new technologies, they're going to be late coming into the market to help. And that's been a big issue. Some things which actually I would have thought were financeable, and I used to be a banker and I was also a bond new issue person, they're not being financed, and we have to ask, why is it? And I think often people are just afraid of these new technologies. I've spent the last few years learning about them. I've actually been advising some companies on them, corporates and finance companies. And it takes a while to actually come to grips with them. Also, of course, the costs of doing it have come down very substantially, whereas for solar and wind power, costs are not anymore falling, but costs for long duration energy storage, for example, which is a very straightforward technology, really fairly simple, although a lot of work and expense has gone into tuning it to make it economic. These sort of things are not getting the attention they need. Also, liquid hydrocarbon synthetic fuels, which are going to be critical, kerosene, petrol, diesel, to replace existing fuels, carbon-based fuels, in the short run until we have enough capacity in batteries and hydrogen power. So we need to put far more money into those things, and we have to ask, why are bankers being so timid, I would say. And I think it is lack of understanding of something quite different. So they need a change of thinking. We have to go back to TCFD and opportunities. Opportunities is what it's about rather than risk.
Absolutely.
But obviously technology risk is an issue, governance risk in these companies is an issue, and without resolving those we're not going to actually get to where we need to be.
So in the book you lay out the spectrum of technologies, you sort of talk about some of the timelines of adoption, and what you're talking about there is, that is a relatively complex subject.
Yes.
So then we move to the different types of financing that can actually help with the transition. Yes, of course, we have to take ourselves from the brown economy, if you will, to the green economy. We have to understand the risk of that. But then we've got to think about, well, as you say, from a bank's perspective, the opportunity. What are the two types of financing that you're talking about?
Well, the way I see it, we have different technology readiness levels. It's a scale NASA produced at 1 to 9, and round about, say, 5, 6, 7, it's going to be all equity financing because it's a new technology, it's risky. Then it gets up to stage 8. Once you're at stage 9, you're actually big time in business, and actually good revenue flows. And one side is getting this development finance and governments involved, research institutes and so on. But then the thing I'm more concerned with is how do we get the banks coming in to provide financing to scale up this whole thing. We need to scale up the real assets and we need to scale up the financing of them. And of course there are two types of financing. There's project finance and there's corporate finance. And traditionally projects have been done on project financing basis. But if we take a company like Ørsted, they have actually decided it's more economical, lower cost of capital to do corporate financing and then distribute the money to all their projects rather than having a lot of projects raising their own financing using project finance. So we have to look at how best to finance these companies, how to minimize risk. And obviously if you have a portfolio of new projects, some of which may be a bit risky, as Ørsted have, if you're financing it through the corporate centre, you are diversifying that risk immediately.
And do you think, I mean, a lot of people talk about blended finance and, you know, public-private money,
Yes.
and then there's all this talk of allocations, but which don't ever seem to get dispersed. You know, where are we in that, you know, the combination of the public money? Does it have to be like the solar and wind industry, you know, where there are these subsidies that are put in place, or does it have to be development money? Where does the public money meet the private money in your two examples?
Well, I think you need public money at the development stage of new technologies because an individual company cannot take, a small company can't take the risk of developing things which may not come to anything. And in the States, ARPA-E has been very good at financing companies at this stage. They hope, of course, that when they get to TRL9 out in the big wide world, that they can finance themselves. And it's quite possible they will, just as wind and solar have. So I'm fairly confident that some of these technologies will actually be able to come to the bank market, syndicated loan market, and the corporate finance market, and be able to expand. Our problem is not so much the lack of technologies as for some reason, the inability to scale up both the financing and the actual manufacturing processes. And we've seen an example of one of the electrolyzer companies, which is very well established, very successful, finding it very difficult to actually scale up. And that's not unusual.
No.
We have to accept that there will be hiccups.
Yes, I mean, we saw this, we did a case study, we have a sustainablefinance.live workshops, and we had a company called Core Energy, and what they're doing is they're using salt caverns to actually, you know, take hydrogen and compressed air and store it at volume.
Yes.
And they were just telling us that the cost of capital, you know, is just prohibitive to them scaling up. And I guess it's, as you say, because of the lack of understanding of the technology, therefore it doesn't sort of fit the risk profile, therefore the discount rate becomes, you know, very punitive, and so it inhibits the whole cycle. But you have a great example of success we should focus on, which was in Australia, so maybe we should focus on a positive.
That's Fortescue Future Industries, and the chap who set it up, he's one of the biggest mining magnates in Australia, multi-billionaire, called Andrew Forrest, and he's a great believer in the need to move forward. He's actually got a business plan which I'm sure he will execute, which is to convert all his mining activities to zero carbon, not just net zero, but actually zero, which is a different thing, and to use his research activities to help the customers of his iron ore product, the iron and steel companies, to decarbonise as well. And he's also starting to make hydrogen and to use that technology around the world to help expand the hydrogen market. Some of it will be exported to Europe. You can make hydrogen obviously in windy places or sunny places,
Sure.
and he's got plenty of sunny places to do it.
So it's green hydrogen.
It's green hydrogen, yes. You can convert it to ammonia or even to methane and liquefy it, and then you can ship it. And I think 50% of Europe's expected hydrogen demand will in fact come from places like Australia, Saudi Arabia, Morocco, in the form of green methane, green fuels.
So how far is he on that journey of realising that business model, would you say, and how's he financing it, I suppose, to the point of your book?
That's a very interesting point.
Yeah.
I'm not sure. He doesn't disclose very much about that.
Okay.
But it's partly done with partners who are helping with the financing. He himself has enough money to finance a lot of it because iron ore mining has been very profitable. And I don't doubt he will actually bring forward some projects and get in project financing and also financing with partners who are users of hydrogen, liquid fuels, ammonia, fertilizer, and so on. That's a common model actually to link with users, and they help provide the financing.
Right, absolutely. I know certainly, many years at Microsoft, and what they do is they put a lot of their money into actually moving the market forward.
Yes.
With their market power. So I suppose that's an example of what you're talking about. Towards the end of the book, so you start in the book talking about, as we've said, the energy spectrum and what it will take to get there. You talk then about the financing options and risk, which we've dwelt on a little bit. You also start to talk about the sort of portfolio, temperature aligned portfolios. Tell us a bit more about what that is and how you're seeing that play into, again, the narrative of the book.
Yes, that's an interesting idea which hasn't been fully developed yet in the industry. The Lombard Odier are quite far ahead on that. It's saying, how do we explain whether we have a portfolio which is clean and green or not? What statistics do we use? And this is trying to give a portfolio temperature. For example, my portfolio is 1.5 degree portfolio. Well, obviously that's great if you can achieve that. Someone else's portfolio is 3.2 degrees. And of course, as we know, if the Earth gets to 3.2, a lot of industries won't exist. A lot of destruction will be caused. So anyone with a high temperature portfolio is going to be pretty easy to spot. That of course brings litigation action against such companies, such portfolios. So actual litigation risk, I think, is going to be one of the drivers of the energy transition. Both fear of litigation risk and the cost of it to companies and to financial companies. Banks may get involved in this. They may actually be sued as well because they are financing these emissions.
Some people would say that this is actually creating a paralysis in the industry. People don't want to enter into the space of financing because of the threat of litigation. Do you have a response to that?
Well, the people who face the biggest threat are obviously the big banks that have huge books of, call it dirty portfolio. The ones who are doing well are those who are actually financing new clean assets. Many people think all you have to do is just sell out of your portfolio the oil and gas and power generation, and that's the job done. But actually that achieves nothing because someone else just buys the assets from you. If the only thing that will actually achieve a transition is the actual production, creation of new green assets to replace the existing ones. and that has to be done much more quickly than it has been to date.
Absolutely. Things like the Transition Pathway Initiative, is this the sort
Very
of area
much
you're talking
TPI,
about?
yes.
But quickly before we finish, coming back to the temperature aligned portfolio tool, I can see that's an appealing label, if you like, so that I as an investor can know what I'm buying into. But how can we avoid greenwashing? How can we prove that that the statistics feeding into that portfolio are valid?
Well, at the present time they're not. That's the problem. And a lot of the reporting that's required is not mandatory. I think governments are going to force companies by making it mandatory. TCFD is not mandatory. Companies have certainly been greenwashing, as have financial institutions. I think the only thing that will shift people will be, first of all, much more forceful government action, regulatory action, which is not, it's not saying we would like you to do this, but you have to do it. Like they said, from 2030, no more petrol and diesel cars can be sold in the UK. I think it's 2035 here. But without the new assets being produced, we're not going to have a transition. And so it's a new approach which will have to be taken by the banks to fill up the gap in their portfolio as they run off the oil, gas, power, etc. parts of their portfolio.
And I think we often talk about Triodos. I almost feel like I'm an ambassador for them. But they have a really successful growth in their one of their portfolios. We invested. We interviewed one of their strategy people recently, and he spoke about the growth in that. But people can actually get ahead of the policy response and the regulation. If they see the opportunity, they can lead the way, and there's examples of how money is being made. And we've had people through here this week who are telling us about the journey they're making as much bigger organisations, which is harder than the smaller ones. Do you feel that, I have a sort of sense of hope that you sometimes don't read in the press, that people are actually heading in this journey. Do you feel the same?
I do. I'm actually fairly positive on things. I do think at last, helped by the horrendous climate experience we've had in the last year around the world, that things are moving on. And one example, I'm doing some work with a fund which is investing in long duration energy storage. It's a new technology which seems to work well. It can be bank financed because it's not extraordinarily complex. I'm also doing some work with an Australian company which hopes to compete actually with Fortescue Future Industries,
right,
which is quite a challenge.
So lots of good opportunities
indeed
emerging. Fantastic. Well, let's leave it on an optimistic note. That's the best way to leave it.
Indeed.
And your book, we'll put a link up so people know where to get it. It's a wonderful sort of Bible of information that people should be drawing on.
Thank you
so much. We thank you so much for your time today.
Okay, thank you.